Welcome and thanks for joining everybody, and now also unmuted for all of you to hear me. Welcome to our xChange webinar about what the top leasing companies are doing in 2022 and what we can learn from it. We've got two very exciting panelists joining us today. We'll have Jorie from Florens and John Fossey from Drewry. Welcome to both of you. I'm super excited to have you here on our show. I was tempted to say, but on our panel, and super keen to hear your views on the leasing market, what we've seen over the last 2 years, and where we're heading now, what we can expect going forward. We're going to wait a couple of more minutes for some more people to join. I think we have more than 100 registrants, so expecting quite a crowd here. Before we join, feel free to answer our poll on the right-hand side. There's a couple of questions for you to also already let us know what interests you most and what you're most keen to hear. Please make ample use of the chat. We'll be able to use the chat also as our basis for Q&A. So feel free to jump in anytime to ask questions, and we'll address them at the end. This session will be recorded and also shared sort of on our website, and of course to all participants after the webinar. So in case you missed an important point, you'll be able to rewind and look at it again. Yeah, and maybe a last point, of course, Intermodal Europe is just around the corner. So for all of you who are also participating there or attending the show in Amsterdam, I know we have a stand at H50. Probably Florens also has one. Jorie, looking at you, you're nodding. So feel free to drop by. Super excited to see the industry, see all of you there again face to face for a beer, a coffee, and a good chat. So we'll wait maybe another 30 seconds. Maybe in terms of modus operandi, we'll have here Candice sharing her screen. We'll have an interactive whiteboard discussion where I'll take a note of the questions that I ask, that you guys ask as part of the Q&A, and then I'll type or try to keep up with the answers and also note them down on our digital whiteboard, and then we'll be able to share that after the webinar as well. In 2021, so looking back a year, of course, a year under the pandemic, where we've seen the first real impact of port congestions and hinterland congestions, so showing its impact on the supply chain. We've seen the global container fleet grow by around about 15% to grow to more than 50 million TEU. And this growth is 3 times as much year on year as compared to the pre-COVID average growth of roughly 5%, which is very, very modest if you account for also fleet substitution of older units, etc. So clearly in 2021, especially top container leasing companies, but also the other big container owners, namely the shipping lines, have been investing massively into their fleets and expanding their containers under management, and of course for good reason. But then in 2022, we've seen a very different year with sort of a container surplus starting to show up, supply chain congestions being reduced, demand slowing down, fears of recessions on the horizon. So there was much less ordering activity from the container owners on that end. And we are very, very keen to, of course, understand and shed some light on the underlying trends. Where is the market developing, and what can industry participants do to prepare for 2023 and beyond? For all of you who were not here in the first 2 minutes, we have John Fossey from Drewry to discuss how the leasing market responds or affects the container production and container disposal tendencies. And we have Jorie Gao from Florens to help us understand some business motives from a leasing company perspective. So lifting the curtain a little bit or look behind the curtain, so to speak. Before we sort of jump into the question, and then I shut up and let the expert talk. A quick glance at our own finding. We just recently published a report, which is freely available on our website, and the research shows that investments into new fleet has slowed considerably over the past couple of months, although there's still positive investment going on. Leasing companies are putting much more focus on where to actually invest and what to invest in. Sustainability seems to be also an increasing trend if you look at annual reports of container leasing companies and other big stakeholders. So keen to also understand how that might impact business plans going forward. Perfect. That's enough of me, I would dare to say. Let's jump straight into the questions, and maybe start with you, John. If you look at the container surplus, how would one expect container leasing companies to react differently now, late 2022 and 2023, when there was dire shortage of containers? Anything you can see there or you expect particularly?
Okay, no problem at all. So I think, Christian, you specifically asked about what the leasing companies would respond now to some slowing demand and so on. Well, I just wanted to recap. In 2021, we obviously saw a massive increase in containerized trade, particularly of consumer durables. There was a desperate demand from the ocean carrier fraternity to phase in more containers to both cope with that additional demand, but also to deal with what had become a lot of congestion in the supply chain, in that the containers were much less productive, probably conducting 20-25% less voyages than they would normally have done. So there was this desperate demand for equipment, and the leasing companies responded by placing orders for significantly more equipment, and particularly of 40-foot high cube containers. That's where the main demand came from. What we've seen from the summer months of this year is, as a result of rising inflationary tendencies in the market, higher energy and food costs, particularly because of Russia's invasion of Ukraine, and an easing of those supply chain congestions, that productivity of equipment has stepped up, as indeed it has for ships. And so we're now seeing surpluses of equipment start to manifest themselves in various regions of the world. And what Drewry has noticed in its latest research, which was published in our Container Equipment Forecaster, published in mid-October, is that there's been less renewal of initial lease contracts. There's been more off-hires of equipment and returns of that equipment to leasing companies, who are now addressing this issue, and I would say restructuring their fleets to meet this new market demand by selling into the second-hand market. And that's having an impact on prices in the second-hand market. Nothing catastrophic at this stage, but nonetheless, with the scale of redeliveries and the retiring of those aging containers that were kept in the fleet in 2020 and 2021, a flood of second-hand sales. So I think that the leasing companies at this time are dealing with the situation rather well, but they are obviously selling as many boxes into that second-hand market to take advantage of what are still reasonably good prices before the market does decline further this year.
Understand, and that's sort of focusing on the disposal and point well taken, and its impact on the secondhand market. What do you expect on the sort of new purchase side, on the ordering side, in the big factories in China?
Okay, well, orders are well down by the leasing companies this year, but I think that was inevitable after the boom in orders in 2021. And when the major leasing companies announced their annual results for 2021, it was quite clear that their capital budgets for new equipment acquisition this year would be smaller. So what we have seen is a reversal in the trends this year, to be honest with you. We would normally expect for new build orders and deliveries that the leasing companies would account for about 2/3 of those deliveries. Well, this year, they've accounted in the first 9 months for about 30% of deliveries, and it's been transport operators and primarily the ocean carriers that have led the orders this year. It's also notable that there's been more 20-foot containers ordered this year. Again, that's mainly down to the role of the ocean carriers in the order book. But what we expect is that the leasing share of the market will decline this year and also in 2023, when we expect the budgets for leasing companies for new equipment to be lower again. So they've responded to the market conditions by ordering less equipment and much less equipment, I would say.
Makes sense. And why do you just to understand, what's your perspective on the ocean carriers then? Why are they effectively not reducing their ordering behavior as much as the leasing companies?
I think there's two reasons for this, Christian. I think the first reason is that obviously they've made huge profits in the past couple of years. They've got a huge amount of cash and they're spending more of that cash on equipment. That's the first factor. The second factor is that several carriers and several among the leading operators, the top 10, have made a decision to reduce the leased components of their fleet. And to invest in not only more of the specials, but also more dry freight containers. If you can take an example, MSC is both expanding its fleet, but also replacing a huge amount of older containers. And they will take delivery probably this year of around about 1 million TEU equivalent of new containers. In the first 9 months of this year, CMA CGM took delivery of around about 250,000 TEU, and Maersk is around about 80,000 TEU. So it's a combination of having the cash to invest in equipment, and it's also taking a strategic decision that they want to own more of the core elements of their fleet. And I think that partly stems from the COVID-19 pandemic and some of the issues they faced with not having enough equipment in their pools to satisfy all of their customers because of the congestion.
Mm-hmm. So focus on resilience, so to speak, instead of just pure cost efficiency.
Absolutely, Christian. I think that is a big factor, resilience, without a doubt.
I understand. And this is also something that we see on xChange very, very regularly. A lot of our customers have increased their usage of xChange to gain more flexibility, to gain more resilience, especially during those 2 years of COVID and supply chain disruptions. And because xChange, both on the leasing marketplace as well as on the trading marketplace, really gives that added level of flexibility in finding equipment if you don't have your own fleet or your leased fleet available. So yeah, very, very interesting to see that also leading to such a strategic decision on the sides of the carriers. Jorie, is this sort of what you also see from a leasing companies from Florens' perspective? Is this something that you can echo, or you have a different perspective here?
Well, I totally share the same opinion with John, but I'd like to share a little bit more from just the equipment type, like John just mentioned. People, those top liner, they focus more about the 20 foot. it also reflect during the year in our Florens business. Of course, we did some research. There's nothing special like COVID. No, there's nothing that special. It's just like 1 year ago, the freight rates are just too high, too expensive for those 44 high queue. So no one dare to spare even just like a half TEU for other equipment. So there will be some shortage for the 20 foot. Of course, there will be some shortage for other equipment type, but as such as a common equipment type, that 20 GP will be some outstanding behavior during the year. So everyone focus on this. And also, like John just mentioned about those top liners like MSC, CMA CGM, HABA, and some Taiwan carrier, those top carrier. We, of course, follow their purchase historical data, right? So next year, they probably will over like 1 million new vessel space will be on board. That's everyone looking for. So I think that keeps everyone's eyes there, and just back to our respective.
Gotcha. And what's Florens' sort of view on the market? Like where are you particularly? I mean, as much as you can share, of course, but where are you particularly looking at? John mentioned sort of the secondhand disposal market. Is this something where you look at sort of from a strategic perspective, and vice versa on the new ordering side? What are sort of trends and factors that you take into account to adjust your ordering behavior?
You mean during this year or next year?
This year is only there remains only 2 months, so probably the end of this year and then next year.
Yeah, well, actually during the year we did during this year, okay, we did focus on those disposal for the second hands, because like just mentioned, the rates also very attractive to leasing companies, and we did receive some returning from those top liners after this summer. Okay, before this summer, probably even not one there to return. But after summer, yeah, we have some. But the price still goes very stable. So we focus on the disposal, and that will help us to optimize our fleet quantity as well. And about the ordering for the next year, maybe someone will be thinking we will be quite hesitant if we make the order, but we did share the different opinion because from like 9 months ago, everyone from our industry think this year, 2022, will be the post pandemic period. So everyone probably will face some massive redelivery. But luckily, we have like a half-year lucky draw again. But next year, definitely, there will be some. We have to face those post periods. That's for sure. That's the second point of our view. But there will be also a very good time for just to, make the portfolio about what we have on our hand. Because after those handing interest rates, there will be a little bit pressure for those, how can I put that way? For those corporate which without the volume, they will have some pressure. But for us, for those leading leasing company, it's okay. For those top shipping liner, there will be definitely okay, right? So it's still the good moment for us to do the shopping during the whole industry, but just with some equipment type choose with the timing choose.
Gotcha. And sort of looking at the different leasing companies, and sort of taking into account the differences in fleet age, so to speak, or fleet age composition. You see some companies with a very young average fleet age, for example, Beacon with around about 5 years, or Tuax on the other extreme with around about 11 years. How do you factor sort of the age of your fleet into account when looking at your ordering and disposal plans for next year?
Well, does the age affect our choice or our utilization? Definitely yes, but with very limited effect. Because we do have the different customer group, right? And everyone has their own needs. So for our volume, you can always fit with this a stable customer different group. So no problem at all. But for those life cycle, those long-term lease, there will be definitely no problem at all. Because for those like MSC, like those top liners, they usually can keep the containers much longer than usually leasing company keeps. So yeah, they are our key customers for the leading, not only for Florens, also for like a Tax, a Triton, also for like a Beacon, CI. Those are just our main customers. So if we would like to keep the older fleet age, we just need choose the right customers.
Yeah. Okay. Sorry, I'm just thinking of another customer. Okay. Okay, no, that makes sense. That makes sense. And when we sort of just going back once a little bit more on the disposal side, how do you actively steer that? Do you sort of work with your liner customers in order to get back specific I don't know, production series or specific groups of containers in specific locations to then have local or regional sales teams disposing these units? Or how do you go about that, so to speak?
Well, our majority will be wholesale.
Okay.
Yeah, we do have very strong sales team globally. We have I think we have almost 20 office globally. I was working in trading team 3 years ago. And that's our like a backup, just can strengthen our possibility for all those at disposal. So usually we won't make like a special team like tailor-made for those second hand, especially for those quite old age. Okay, but for some let's put that way, it's not demanding area. If we go into those not demanding area, of course, some quite lovely customer service will be provided for sure.
Okay, but not with your own team, or do you have like people internally who then manage those specific deals or those specific wholesale customers?
Yes, definitely. We have very professional team.
Okay, cool. Perfect. Thanks a lot for sort of giving us some background here. It's very interesting. Maybe moving over here to the second sort of part of the panel discussion, moving into sort of 2022 movements and business decisions, and looking at you, John. I read the report of your team on container leasing titled Container Census and Leasing Annual Report 22-23. Do you want to give the audience just sort of an overview of what are some of the highlights in the leasing market, of what you found, what are your key findings, etc.?
Yeah, I can certainly do that, Christian. And I can also bring the audience a little bit up to date because obviously since the annual report was published, we have researched and published the Container Equipment Forecaster that tends to, it updates the market on a quarterly basis. But effectively, I suppose in general, compared to 2021, the market, and certainly since the summer months, has been a little bit on a downward spiral. But I'd like to stress that downward spiral has not by any means been catastrophic. And it does reflect what I said earlier on about Drewry really lowering its forecast for container handling activity. And in terms of vessel capacity, some ships being idled and some additional scrapping that is now being forecast for next year, that will mean that the market stays a little bit more in balance than perhaps would have happened in the past. But yeah, let's just look at some of the highlights. Well, to start with, this year has certainly seen lesser activity on the new builds front, much lower than it was in 2021. We've also seen lease rates ease back in 2022. At the end of the third quarter, Drewry research showed that for initial long-term lease rates, for most of the dry freight containers, that's the 20-foot standard, the 40-foot standard, and the 40-foot high cube, we were seeing lease rates about 20 to 22% lower than they were in the corresponding period of 2021. But I should also add that in September, October of 2021, that's when prices across the board were at their highest level. So that was lease rates, that was second-hand prices, and that was also new build prices. So we've seen a decline, but again, we've not seen a collapse in those prices. And the important thing, I think, from the leasing sector's point of view, is that the initial cash returns have held up pretty well and are expected to hold up in the whole of our forecasting period over the 5-year period. So we're looking at an ICR, initial cash return for a 20-foot box, of being in the high 9 to 10% range. So that, I think, is quite a good story for the leasing companies. This year, we've noted a slight decline in the length of the initial long-term lease periods. In 2020 and 2021, where there was this huge demand, particularly for those 40-foot high cube containers, we started to see ocean carriers sign up for initial lease periods of 12, 14, and in some cases even 15 years. Since the summer, that's dropped slightly, so back more to an 8 to 10 year period, I would say. We've also seen new build prices fall as well, and new build prices are falling slightly higher than those of lease rates. So we're looking at a 40-foot high cube container at the end of September 2022 costing around about $4,245 US dollars, and that would have been $6,420 US dollars in the same period of 21. So leasing companies that are buying equipment are now buying that equipment at significantly lower prices. The main factor, though, Christian, and perhaps the main downside for the leasing companies, is the fact that the off-hires and the equipment returns, the empty equipment, is being returned to leasing companies at a much higher level than in 2021 and even in the first 6 months of 2022. So we're seeing monthly returns approaching levels at the early days of the COVID-19 pandemic in 2020. And that, as Jorie's alluded to, is resulting in leasing companies selling more containers more quickly into the second-hand market. And that, I think, is a trend that's going to be borne out to the end of this year and certainly in 2023. And we do at Drewry expect the overall container pool to actually decline in 2023. We're expecting a 3% decline in the size of the equipment pool, and a lot of that will be borne by the leasing companies because we expect the leasing share to fall and the transport operator share, which includes those ocean carriers, to increase.
So this is very interesting. Actually, sort of from a period of sort of almost over proportional growth in 2021, we're now moving into a fleet shrinkage. something we don't yet see on the vessel side, but certainly on the container side. So I think it's very interesting. Maybe also something to almost treat as a leading indicator. Do you have any numbers there, or any feeling for the scale in which you expect this to happen?
Yeah, I think we're looking at the leasing company fleet falling by as much as 500,000 TEU equivalent in 2023. We're expecting the global fleet to fall from about 50.8 million TEU to just over 49 million TEU. And we believe that from 2024, we will start to see some growth again. The logic is that carrier profitability will fall in 2023. Once that profitability falls, and once, let's say, we come to a new normal, ocean carriers will probably invest fewer funds in equipment and start to rely more on leasing company containers again. So we expect by the end of 2026 that the leasing company share will increase from about our forecast of just over 48% in 2023 to close to 53% in 2026. So and Christian, two things to mention here is that ever since the birth of containerization, really, the demographic ownership shares between lessors and ocean carriers have been pretty much 50-50 actually in many years, or have ranged between 47% to 53%. So we don't expect anything out of that range, but we do think that the ocean carriers from a high point in this year and next year will start to fall as leasing companies again become the vehicle of choice for equipment.
Understand, sort of oscillating around that long-term average of roughly 50-50. Yeah. Okay.
And just as another number, we expect the total pool in 2026 to total just over 55 million TEU.
Gotcha. Okay, yeah. Okay, seeing that uptick in growth again. Okay, makes sense. And maybe one last question on this, just because it's interesting. Do you, with sort of fall in demand and at the same time easing of supply chain congestions, etc., which created that perfect storm that led to a shortage of equipment, sort of that going away, what do you expect in terms of actual demand for container fleet capacity? I know it's a bit of a difficult number sort of to arrive at, but I mean, if I talk to sort of industry participants, no one really expects a supply-demand balance for container fleet in 2023. So what's your view on that?
Yeah, that's again, I don't get involved so much in the vessel capacity side. That's one of my colleagues at Drewry. But there's kind of some different thinking here as to the impact that the new IMO regulations will have on the size of the container fleet, and how many ships might slow down, how many ships might be taken out of service because they don't comply with those new regulations. The Drewry view has been that won't have too much of an impact, and that it will be incumbent on operators to either idle their vessels or indeed take the decision to scrap some of those older ships that are currently in service. When we do our forecast for the container equipment market, we take into account three major factors, really. Those factors are the shipboard slot ratio and how that might change. It's the amount of growth or contraction in global container trade, which we measure really by container throughput handling activity. And it's that percentage of equipment that is going to need replacing. Now, at Drewry, we have a model that really the replacement is based on obviously the age profile of that equipment, but we believe there's a fundamental difference between when leasing companies start to think of disposing their equipment into the second-hand market and the ocean carriers. And currently for dry freight containers, we believe that for leasing companies, it averages around about 14 years at the moment. And for ocean carriers, it's about 17 years. I'm quite interested to see what Jorie thinks on that count, actually, to see maybe how close we are to what Florens' view is on that. But then by taking all that into account, we come up with a production forecast and ultimately a container fleet forecast. And we, at the moment, believe that there's about 6 million TEU of surplus containers in the global fleet that will need to come out of that fleet to ensure a balance in a post-pandemic trading environment. So I don't know whether I've skirted the issue there, Christian, or answered the question that you asked me.
No, I think that was exactly right. I think I missed your second point. You said you consider the box to slot ratio. That was the first one. The last one was replacement, sort of need and replacement activity.
We look at the incidence of replacement, which is based on the age of the equipment, and that varies by the ownership profile. We've got a different retirement for leasing companies than we do for ocean carriers, for dry freight, and for reefers. For tanks and other special equipment, we tend to use the same sort of retirement age of about 17 years.
Gotcha. Okay, understand. Jorie, John almost segued over to you. What's your view here, especially on the sort of supply-demand situation for containers in 2023? What's 2023? What's Florens's view, and how do you also forecast this?
Well, there will be one point uncertain. First is like I just mentioned, there will be over a million new vessel will be on board during the whole year, and we did some follow-up. But next year, we also think there will be maybe that's the uncertain point I just mentioned. There may be the top line are also there to do some disposal for their second-hand vessels. Okay, it's kind of like unusual compared to last 5 years, because like 3 years ago, before the pandemic things, their cash flow probably not that strong enough to support this activity, but things changed. But also because of the strong cash flow, so maybe they will put away for idling. To be very honest, it's a little bit too early to say it. We are doing this unjudged things. Internally, we have our research team to have some planning for both sides. So we will watch on it and to see. So if the top liners, they are doing those disposal, scrapping the old second hands vessels, then definitely the demand will be quite weak, right? And all of those top liners, they purchased too much during this year. So the new container will be fly to them within next maybe 2 or 3 months. So what if the vessel keep like the smaller scoop, then there will be very negative view for the demand things. But if they like to keep those things still idling for a while, then for the next whole year, there still be a long year, right? No one's saying there will be another like black swan things happened again. Then suddenly those idle staff will be thinking, okay, we have the business, and our own boxes are not there in the Pacific area, so we might have the demand for those leasing companies. So internally we're doing this business analysis half and half. That will be the majority point for our view. And from the other side, still next year, we believe there will be a perfect timing for all the leasing company just optimize our own fleet. Just because like everyone is purchase LNG vessels, right? But that's not the ultimate one. There will be more environmental friendly vessels. And for our leasing company, we are waiting and to see maybe there will be like a new energy source, new type will be coming. Also, there's no clue at all yet. But like the fuel cell, it's like a clean, efficient but expensive new energy source. Maybe we will have our container business a fuel cell happened during maybe probably not next year, but next few years. So we have to be prepared. We have to just clean what we have, just organize it. So next year will be the perfect timing. If we treat like that way, at least the demand from a leasing company side will be strong, will be quite strong. To those, we might have a massive order to the factory, the manufacturing factory together.
Makes sense. But sort of just to put you on the spot, sort of would you echo what John said about roughly 6 million TEU surplus in the market right now? Or is that a figure that you see too high or too low?
Sorry, I just stupidly mute myself. Well, we didn't do the whole research completely, but I believe John's number are quite make sense.
Okay. Okay. Cool, perfect. No, this really helps, and of course it will shed some light on what we can expect sort of big container owners to do in 2023. Sort of rebalancing and optimizing your own fleet will of course lead to increased disposals on the increased or at least sustainably high disposals on the second-hand market and continued price pressure. So that of course makes sense. If we look at 2023 and sort of still looking at you, Jorie, can you share some information on what is your plan, your goals for 2023 as Triton, apart from optimizing your fleet?
Sure. I can share parts. Yeah. Well, besides the dry freight, our Florens probably will put more eyes on the reefers, on those special equipment. Not only like flat rack, open top. We are also have the new source on those tank. Not just ISO tank, lots of, and we have doing some tests. We are doing some trial run for some new things, more sustainable, those environmental friendly side, because that will be everyone's what everyone wants and what everyone goes. So since we have the source, so we've already on it. But for this part, probably next year you guys will see it if we can successfully nail it. And for the other part is we, like I mentioned, we have a very strong trading team, and we also have a strong logistic team. Speaking of this, like everyone from those top liner, they are doing the purchase, right? They're doing the shopping things like crazy, because they would like to complete the whole process, door-to-door delivery, right? Then everyone would like to take a scoop from it. Even we just a leasing company, we would like to try if we can be part. But definitely there will be more pressure on us because we don't have that much source. But the logistic team, those are one-way team, those are customer analysis team, that will be the key points for if we would like to develop on that side. And we also would like to provide those service to our all customer and our potential customer. Like we can provide almost the same as those liners. So that will be that will be a huge topic. So yeah, will take a long time for us.
Makes sense. And I also read that you are investing specifically into sort of a customer-centric digital service ecosystem. And of course, digital is close to heart for us. So I have to ask the question, what is this? Can you shed some more light on this? What's your view on, this is a very broad question, what's your view on digitalization of the container or container logistics? And what's your role?
Okay, I guess you probably learned that from our website, because we've already launched half. It's about the trading, and next year we will launch the other half. It's about the leasing. That will be quite interesting to give a try. Everyone, please. So for this ecosystem, the first point definitely is about the environmental friendly, for sure. Then the second point will be everyone knows Starbucks, right? I'm the fan of Starbucks. I'm the fan of the drinking coffee. I hope from the audience, no one working for Starbucks. But I heard a lot of thoughts saying, Starbucks tasted just like a water, whatever. It's just not that unique, strong flavor, whatever. Okay. But for me, why I become a fan of Starbucks, because at least they can provide the unique service. They can provide the unique leverage, right? Whatever and whenever, if you can see a Starbucks, you can get what you expect. Okay, nothing more surprise. So for our system, we'd like to provide high quality but unique service to each customer from our Florens. When they use our system, they know what's the bottom line they can get. Okay, so for our IT team, what their aim is to make this bottom line is higher than the average from the market. They already make us success, right? So with those stable expectation in the business from the order connection, you heard that. Then we also have our strong marketing team. We get some business analysis. We have those big data. We can provide quite tailor-made service, those leasing contract planning to each key customers. Then that will be the surprise from the human made. So,
and if you, I think this is very interesting. And if we go to the container itself, I mean, a few weeks ago, everybody was talking about Hapag equipping all of their containers with tracking devices. Is this also something that you see happening on the leasing side or for your fleet? What are sort of specific digital and technological solutions that you see sort of, I don't know, getting a foothold in 2023?
Definitely. Yeah, probably I have to share even a little bit more from our part. It's if we can get a certain answer from those top liner, like which they prefer for those installments for the reefers or for the dry freight, we will make the order when the new production produced. Okay, but those things are too new, too fresh. So each one has their own taste. So we cannot do the pre-order things. So, but we will follow. Once they have some major trades during the market, you will see there will be a handle in each Florens box.
Makes sense. So you don't have, so you say you follow sort of what the customers want. And do you have an expectation of where this will lead in 2023 and what you can expect?
Well, I don't think it will be happen that early because the cash flow, also the cash flow. Our key customer, they have too much cash flow on hand. So I don't think they need us in that very early stage.
Okay, so very unusual situation for the shipping industry to have too much cash on hand, but it's I guess the liners take it. Okay. Okay, perfect. This was very, very interesting. I'm looking at the time. We have only 8 minutes left, so would love to look at some questions before we lose ourselves and I ask too many questions myself. I think Candice has posted here already 2 questions that came in. To the audience, feel free to post more questions in the chat or into the questions tab on the right hand side in your event page. First one, an open question for the panel. Possible that you can share the situation of container volume ex-China to the US and Europe during this important peak season. Reports suggest that the containerized trade has dipped. Any open question to you too? Is this something that you see? What's your view on this?
Okay, if I just come in there quickly, Christian, I think there's no doubt that the peak season hasn't really happened this year and is not going to happen. And in particular, there's been some fall off in trade to the US, to a lesser extent Europe. But I think it's reflected in the spot rates in particular. The spot rates have dropped dramatically in the past couple of months or so. Charter rates are now coming under pressure as well. And the implications are that that will have to lead to some capacity being withdrawn from the market to ensure that there is some stability to it. But yes, inventories are high with most retailers in the US, and it's a challenging period now, I believe, for everybody until after the Chinese New Year, and then we'll see what happens after that.
Okay. Anything to add from your side, Jorie?
Yeah, I share the same about the freight, but now it's a kind of a slight peak season for the reefers. For the reefers, still goes strong, but for the dry freights, probably not. Yeah, like John just mentioned, everyone probably waits for another 3 months, which will be quite sad. I guess people thinking we are facing those fatigue and weak moments, which we don't think so, but those affect their shopping activity, so will affect to those shipping lines.
I think, Christian, as well, sorry to interrupt, I think
Go ahead.
when you look at the equipment supply situation, our understanding is that orders for containers at factories in China up now to the Chinese New Year are very low indeed, because the factory stocks in China have built up to a level where there's really little appetite to invest in new equipment. So from a situation early in the year where factory stocks were 200,000 TEU and below, we're now up to more than 750,000 TEU. So there's really no need to order new containers. And factories themselves, and again, Jorie may be able to have a better insight into this situation than myself, but my understanding is that some factories have remained closed, container factories have remained closed since the October national holidays in China, and are or already have implemented reduced working shifts up to the Chinese New Year.
Yeah, makes sense. And this is also what we hear from our clients, especially the ones that are actively engaged in our leasing marketplace in sort of buy and repo deals. They see this situation similarly. Okay, then would love to sort of, there's 2 more questions here, actually 3 more. Would love to sort of get your view here, Jorie, while we have you on the line with regards to the depot management situation, because we talked a lot about sort of container surplus, blank sailings, meaning more equipment having to be stored on land, awaiting disposal, etc. So this, of course, puts a lot of pressure on depots. What do you foresee here, and how do you manage this?
Oh, that's a little bit headache question. Because we've already not Florens, also other leading leasing company already received the request from our major customer about those redelivery stuff. I believe for those major area, those all depot, they still have the room. But the thing is, the congestion is not only because of the space, the room. It's also something affected because of the pandemic, because of the holiday season. There will be cost more labor. So the reaction will be a little bit slower than those peak season. All these factors maintained together, they will just give every leasing company, marketing team, those operation team, everyone from the, we were really afraid to receive a call from depot or from our customer saying, the depot closed for temporary. They might doing some decoration. They may have some COVID situation, something like that. So that put us in a very uncertain stuff. And to be very honest, for some depot location, they are quite attractive to their local government probably. So they also have some move pressure. So that will put even more negative side to them. And
is there anything that you do to mitigate this?
Sorry?
Is there anything that you do to mitigate this or to reduce this risk? If you look at 2023 and you look at your redelivery schedules, what do you like? Do you try to procure more depot space or find alternative solutions?
Yeah, for us, we'd like to keep our customer service. So we will ahead to book some space from the depot for those popular area and provide it to our customer. Yeah, but the uncertain stuff is when, because the depot will be afraid. They have no idea when will be the new customer to pick up those container from the leasing company. So those reserve stuff service will be quite difficult to maintain for a long period. But we've already trying after summertime. And we will keep to doing this. We will do the research. And once we feel there will be more pressure for some certain area, we will have our guide to discuss with those local people and maintain for some reservation. Seems currently we only have this will be kind of efficient, because the other things will be more uncertain. I'm very sorry about this, but we've already tried.
Okay, perfect. No, don't be sorry. Is uncertain. Okay, I think that makes a lot of sense. I think everybody's in the same boat. Nobody has an accurate crystal ball, unfortunately, to look into. So I think that's well noted. Perfect. Unfortunately, we're a little bit at the end of the time, and I don't want to overrun too much. The questions that we got but haven't been able to answer, we're just going to sort of answer them offline and share them as part of our recording distribution. So you will not be forgotten in case you ask a question that wasn't answered. From my point of view, thanks a lot to both of you, to Jorie, to John, for joining, for sharing your experience, your expertise, and your viewpoints. I think this was very, very interesting. To all of our viewers and attendees from all over the world, thanks for dialing in. Thanks for joining. Everything will be available online after this. And as noted at the beginning, feel free to download our report, and very, very much looking forward to seeing you at Intermodal in Amsterdam if you are if you're joining. I'm happy to, or super excited to discuss the future of container leasing, container trading, and of course technology with all of you. Thanks a lot, and hope to see you all soon again.
Thanks, Christian.
Yeah, come to visit us in Intermodal, and thank you.
Thanks very much. See you soon.